Hey traders, happy Monday morning. Welcome to the weekly outlook. Let's talk stocks, Forex, and cryptos. It is the week of April 13th through the 17th, just coming off of a Easter weekend. Most of the countries and banks continue to stay closed except for the US. We have some data to discuss this week, and I think that the stock market is at an important tipping point / inflection point. We've seen a pretty miraculous recovery in the stock markets, although one may argue that the participation and volume of it has not been so great. We've seen the Volatility Index drop from 85 all the way back down to the mid-40s. You can feel it in the currency market. You can feel it in the stock market. It is a very different vibe out there, in April than we've seen in mid-March when everything was just run for the hills and the sky's falling. So we're going to take a look at the technicals. That's first and foremost the most important thing. Just to put some context out there, the U.S. is, trying to flatten the curve. The stay-at-home mandate's been extended through most of April. In fact, I think most of the states in the U.S. have also declared a state of emergency for funding purposes and testing purposes. However, looking at the Johns Hopkins website, the U.S. curve has really yet to flatten. So any real discussion on getting things back to normal is more than likely a bit premature and, a bit cautiously optimistic, to say the least. But what we're going to do today is we're going to take a look at the technicals and see what decisions we have ahead. But this is what I think. My takeaway right now is that we are at, a big tipping point in the stock market. I do think that the lows from March will likely be somehow revisited or try, at least to see the market attempt to possibly reflect the reality of, how about losing 16 million jobs in the U.S. in the last 3 weeks? How about in the last 10 years, just to put it in context, in 10 years, the U.S. has added 25 million jobs. And in 3 weeks, we have lost 16 of those 25. So you can't tell me that it's a good economy. You can't tell me that it's a rosy and optimistic outlook when the reality is landscapes have changed. So we need to be prepared accordingly, and that's why I'm here for this week's outlook. Let's take a look at everything. All right, if you're following me out there on social media, you can look me up on Instagram, Twitter, Facebook, and YouTube. The last 3-4 weeks running, I've got a nice little segment coming. It's called Ask an Analyst, where myself and a couple other my colleagues are doing some really great content. I'm trying to post those out on my social media pages as well. So take a look at those. Remember my YouTube channel, just go ahead and click like, subscribe, get those notifications. So videos like this and others, which include my best trading strategy, keep it seriously simple video series. Make sure you click on that and ask for more. What do you guys want out there? What do you traders want out there? Let me know, and I'm happy to help with some educational videos. All right, let's take a look at the charts. All right, so here is the SPY, the ETF for the S&P 500. This is the swing from high to low with that nasty coronavirus-induced sell-off. Even though most of the world is on an extended holiday from Easter weekend, the futures market is down this morning. Everything is in red. It's just after 10 o'clock doing the video, so I want to see how the U.S. market opened. We're opening a little bit bearish on that 50% retracement. So my thoughts are that we're going to find a way to revisit at least some of this retracement levels into possibly the SPY going down to 250, maybe retracing into this region. So we have, this low, this high, higher low to higher high. I'm wondering if we're going to come back in and make either a higher low and one more push up into maybe that 61%, maybe forming some type of rising wedge that ends up giving us that kind of technical anticipated move back down into those coronavirus lows. Maybe it's not that telegraphed. Maybe it's not that simple to see. We might have the market come back down first, form a bear pattern right there where we have this as the 50%. We form a bear pattern, have a brief pullback, and we go back down to retest those coronavirus lows. Either way, from a technical side, I do think we're going to make an attempt to get down there. So how am I positioning myself? I just took some trades off the table. I was on, Aussie Swiss. I was long and ended up making some profit, ended up closing out for some losses, essentially neutralized most of that Aussie Swiss. Take that margin. I'm going to apply it elsewhere. One trade that's working really well for me right now is the Aussie New Zealand. I'm going to continue to put in that good margin, put in those good trades to a destination that I think will get hit. So I'm going to focus on, trying to make as much money as I can on Aussie New Zealand. Aussie dollar, I'm going to let run a little bit longer. I think the dollar still has some weakness ahead and some really nice inefficiency levels on that particular pair. But I'm essentially trying to get out of some of those riskier pairs like the Aussie and the New Zealand. They're having a great April recovery. Technically speaking, it's doing what we needed it to do after that big slide in March. So that's great. But I don't want to be, greedy and naive by thinking that, oh, this is the bottom. I mean, look. We might retest those lows from March. In the currency market, we're talking about 1,000 plus pips away from these recent recoveries. So I want to take that into consideration. We've had a good recovery. I've mitigated and minimized, most of my drawdowns, if not all of them, and actually turned some profit. So I want to make sure that I'm being, smart with my margin and smart with my trade sizes and not having any kind of those riskier currency pairs up for grabs when, in fact, I think that the market will sell off in some capacity here and make a correction, or if it does find a way to drift a little bit higher, I would be shocked to see it go any higher than really this 61 to 70% retracement zone before we end up getting a push lower. I just don't see the stock market, especially this recovery isn't really reflecting the reality of how things have changed. So on that note, really quickly, how things have changed, let's go into this. Here's the Johns Hopkins website that I'm talking about. Here's the U.S. And the U.S.'s aim has been to flatten the curve. Well, if I'm checking what flatten the curve looks like, that's Spain. That is actually flattening the curve. How about Italy? That's actually flattening the curve. How about France? Okay, we've had a spike up. We're starting to see, again, the angle is changing. Look at the U.S. Not changing. All right, look at the United Kingdom, the U.K. Not changing. So that trajectory is still higher. Now, there have been reports that there are less cases, the lowest single-day case total in New York City. That's a sign of optimism. Look, that's great. I'm still watching this. Okay, the curve has to start showing a different angle. We have to go from this, steep angle to a lesser angle to then starting to reach the apex and then start to flatten. Then we have the recoveries. But you have to remember that there's still probably tens of thousands, if not more, that are asymptomatic, that may show no signs of symptoms whatsoever, but yet still test positive for coronavirus. So I had an interesting discussion with a friend of mine yesterday that is a teacher. His school and middle school, high school, the entire system, K through 12, is actually implementing online learning and e-learning, which is great. I think that's what kids should still be doing. But at the same time, they are really skeptical of going back any sooner than possibly August. So if there's going to be, teaching right now until the end of May or June, what does summer school look like? What does fall look like as far as getting kids back in? Or do they maintain e-learning through the rest of the year? Colleges are the same way. Colleges were prepared to shift to online, probably better than K through 12. But same thing. Do you bring 10, 20, 30, 40 plus thousand undergrads and crazy college kids back on campus and just trust that they're going to make the right decisions for social distancing? Maybe, maybe not. So anyway, are we flattening the curve? I certainly hope so. It's nice to hear that we're getting less and less cases on a daily basis, but let's see this reflect in the overall curve. This is what we have been taking these precautions for. Let's see it actually start to take effect. So cautiously optimistic, like I said. This is why I'm also watching the stock market. The reality is this. A decade worth of growth has been virtually eradicated in 3 weeks. 25 million jobs, 16 million now lost in 3 weeks. Retail sales reports. We have some news this week. We have weekly jobless claims. We have earnings out from Johnson & Johnson, JP Morgan Chase, Wells Fargo, Citi, Morgan Stanley, Bank of America, Goldman Sachs, the health of the banking sector. All right, we had a $2 trillion stimulus package / survival package. I think we had some opportunities. If you were a buyer 2 or 3 weeks ago, you were loving the fact that you had anywhere from 20, 30, sometimes 40, 50% recoveries on some of these stocks. This was Capital One. We talked about this in one of my Facebook sessions. Facebook Live, Ask an Analyst. We were talking about 40, this is Bank of America, sorry, here's Capital One. Capital One, we talked about buying it at $40. You had a double bottom there at $40, ran all the way to 60 plus. I grabbed it from 40 to 60. Love that gain. Bank of America, lows at 18 and change, rallied up to 25. We're talking about some big recoveries here, but I do think that, look, take the short-term gains, see if we retest the lows. I think if you can take these profits here and then look at building more of a long-term outlook off these lows, you're going to get these opportunities once again. I certainly hope that we do. And it's not because I want to see the economy struggle. It's not because I want to see the global economy and the stock market struggle. It's that I want to be a long-term investor. And so just getting a short-term spike up, I just don't think this is the long-term recovery. I think we're going to grind out these levels back to these lows, and it's going to be the longer U-shaped recovery. And it might take 3, 6, 12 months to do this. But I think if we're buying here at levels that have not been seen in years, then we're setting ourselves up for 5 to 10 years of amazing opportunities. So it's a great spot to be in as an investor. It's a great spot to be in as a trader. But right now, I just feel like I would be naive in thinking that this is the bottom, this is a recovery. I don't think we're there yet. They always say you can't time the market, but you can certainly watch, and you can do a heck of a better job at protecting your profits and, being agile enough to take advantage of the downside when it happens, and understand that, market conditions very much are different. Bear markets move very violently and aggressively and almost irrationally. Bull markets are kind of built on hope, and they're nice and steady for the most part. We've had a 10-year, 11-year, very steady bull run, but you can see what happened here in March. So anyway, bank stocks are going to be interesting to watch. The stock market overall will be interesting to watch this week to see at that 50% level. Look at all the major indices. Okay, the SPY at the 50% level. Okay, go to the Dow Jones at the 50% level. Go to the NASDAQ at the 50% level. All of them sitting right there. Look at that indecision on the NASDAQ. So high, low swing right at that 50% level. We're indecisive. So what am I looking for? Something like this. We either drift up a little bit higher, have that rising wedge look, and then we have a faster fall to the downside, or we have this indecision working its way back down, scoring a point down here, and then we have a continuation move back into these lows. I do think if you're watching the bigger term levels, we will be able to buy again off these March lows. Is that the bottom? Probably not. We'll probably drag this out for a while, and then eventually longer term, we'll be looking at this. But rather than trying to time this longer term move, if I'm buying off those lows, if I give myself the next 2 to 5 to 10 years, I should be able to make some returns on that investment. But it's all about taking that chance at these lows. If you're really trying to time this, then look for the pattern. We might have a giant U-shaped recovery. We might have a giant falling wedge. But one thing that has been happening, keep in mind we have almost $3 trillion extra dollars circulating in the global economies now thanks to Europe and the U.S. So, I agree that we could have a robust recovery, but I don't think that everything is lined up for that to start taking its shape. So I think right now the market is just rebalancing, which I'm super happy that it did that. We saw it in the stock market. We're seeing it in the currency market, and I love it. That's why we trade technicals, because it technically finally obeyed after having just the weirdest, most irrational 2 weeks, 3 weeks that we've seen in a long, long time. So that's my outlook. I mean, the NASDAQ, 50% indecision, probably going to drift lower. The SPY, the Dow Jones, everything, right at that 50% retracement level. Are we going to drift higher for an inevitable fall that might be more violent, or do we have indecision right at that 50% level, and then we start to drop, slowly work our way back down to these lows, and then we look at how do we build off those lows, how do we build that recovery off those lows, and see what the next 3 to 6 months look like. We also have a U.S. election this year. And unfortunately, everything that we're seeing right now with the stock market and the health of the stock market, the state of the economy, will still be politicized, because everything that is likely broken or fragile will be exposed by this. If we have, 60 to 70% jobs being lost and contractions across every sector, there's going to be so much exposure out there with who can actually survive. But I think those that do it well, those that have competitive advantages, those that have good balance sheets, and good financials, they will survive and they will do just well, and they'll be great and they'll be better off ahead. But those that don't, I think that changes the landscape forever. So that's the uncertainty. That's the unknown that we're trying to figure out as traders and investors, and that's what everyday life is right now. It's just the uncertainty. So it's not fun, but rather than focus on that, let's focus on this week and what we can do now. So stock market wise, I'm expecting futures to be more than bearish. If that's the case, then with futures being bearish, I look for currencies to also reflect that. So here's what I'm looking at for my trading. Aussie pairs have done extremely well in this recovery. As the stock market has rallied and recovered, so has those commodity-based pairs. So the Aussie's done quite well. The New Zealand has done quite well. The CAD has done okay. Now, oil has made major headlines. OPEC countries, OPEC members, and Russia agreeing to a 20+% cut in production. That's something to the tune of well over 10 million barrels per day. You can see that the market just kind of priced in some news ahead of time. This was a Trump tweet. This was looking at some type of resolution between OPEC and Russia. We had like a 20+% rally in a couple of days, and you can see that it's faded since. Now, it hasn't taken out the lows. I'm interested in this price action to get oil back up towards the $36 to $40 area. Now, how does that need to play out? We need to see price break these highs. It can be really simple. If we either hold these lows, we might have some consolidation here a little bit longer. But if you're looking at a technical breakout to the upside, if I'm trading futures, look for this daily candle to break higher. And from there, look to trade this up into the gap. This is a safe trade right into around $35, $36. If you want to hang on, let those profits run a little bit, right around 40 bucks, and then trap those profits. So a daily candle close above looks pretty solid. If we also end up coming back to these lows and forming indecision and then something bullish, that's a nice chance to buy low with a stop loss, take it back to this high, take it back to that 35, 36 level. So I'm looking for oil to, have a bit of a jump to the upside as we come into summer months. If we start getting back to driving, if people are leaving, if people are going out again, whether it's in a full capacity or limited capacity, if more people are on the road and there is a demand for driving and a demand for consumption, then yes, oil prices will recover. And usually by end of April, May, summer months with family vacations, if people are going on vacation, that's a good thing. Flights should be cheaper because of better gas prices, and same thing with at the pump. So anyway, I like the technicals first and foremost. Good thing that, OPEC is cooperating. Same thing with Russia, just like banks have done. It's been a global effort. We've had banks step up and provide a safety net. Now we're seeing OPEC and Russia step up and do the same thing. U.S. as well. So technically, I think oil is due for a pushback towards 36 to 40 bucks, but we'll see how these lows play out first. If we close above, right here around $28, $29, look for a daily candle above that level. And from there, we should have a nice clean run towards 36. So that's oil. That will affect the CAD. So if the CAD gets stronger, I think this is a good currency pair to play. If oil jumps up, this is a nice trade on the CAD Swiss. CAD Swiss, we broke these highs. This is a really nice bullish pattern right here. It's a bullish head and shoulders. So our neckline is here, and price is just hanging out around that neckline. Now, any decent thrust to the upside, we should be able to get back into these zones around 70.50 to 7100. Conservatively, I think those are really nice levels to hit. You have an outer trend line right here and a previous low right around 72. In fact, that's around 7200 to 7250. So I do think there's some upside on CAD Swiss. I think that's a good pair that has a nice technical pattern going to the upside that looks a lot like an oil recovery. So if oil goes higher, expect that CAD Swiss to go with it. On the flip side of that, you have the Euro CAD. I typed in Euro Swiss on accident. The Euro CAD, which is a bear pattern. So Euro CAD looking to go lower. Here's the larger pattern right here. Here's my daily chart. Let me go to the 4 hour. There we go. So here's the pattern. So we have our low, low. It's just hanging out right here. Now left tip, center tip, right tip. We have this area that is broken lower between 54, headed down to 52. If we break below 52, expect this to trend into 5,000. So I'm looking to deploy one of my robots on here. I've got this fantastic robot that's been making a lot of pips for me called Right Trader Max, and I've been trading that on 30-minute charts, 1 hour charts, 15-minute charts, 5 and 1 minute charts. I've done some scalping during the week with my trading room. We've let this run overnight on pairs like pound dollar, Aussie Swiss, Aussie yen, New Zealand Swiss, Euro CAD, dollar CAD. It's just been a really helpful way to take advantage of some of this really good price action and this recovery that we've seen in April. And the best part is if we see more of a push lower in stocks, we're going to see more trends and more volatility. So the robot's going to still clean up that way as well. So what I'm looking for on EuroCAD is if we can break below this low right around 5,200, we should be able to drift down into 5,000. That's a nice round number, which is right there. Just another couple hundred pips, and trying to let some, confirmation number one. Let's see if we can close below there first, and then we'll get down into 5,000. It can certainly drift a little bit lower. Previous highs way back here around 4,800. We also have some finishing levels on this overall pattern. If I draw a trend line here, high to low, and we look at some symmetrical pushes, if we go just to symmetry on this swing, that puts us right there around 5,000. So looking to confirm that break and trade this down for a couple hundred pips of open space and try to get I like my Right Trader system to get deployed on a 15-minute chart and try to take a few trades there and compound some gains towards 5,000. So CAD Swiss will be good to the upside. Euro CAD looked good to the downside. The Pound CAD has not quite behaved the same. We have a similar pattern setting up on Pound CAD, but we don't quite have the same setup. This has really not made the break to the downside, but here's the pattern if you can see it. We have a low, we have a low. If this is trying to set up a bearish structure, the bears need to break this low below 7,200. So if we can break below 7,200, I think it looks pretty solid for us to continue down towards this low around 6,600. Now that's a lot of opportunity. I'm excited about 200 pips on the Euro CAD. A break on the Pound CAD could give us upwards of 500 or 600 pips just to get back to the same low. Now, how does this end up playing out? This might be a high, low, lower high to lower low, lower high to lower low. We might have this move in a bit of a channel fashion to the downside, but I do think that we're going to come back and revisit those lows around 6,600. So pairs like that, if oil recovers, those are good pairs to watch for. Elsewhere, Aussie Swiss. Let's talk about that one since I said I got rid of some of my Aussie Swiss. Had some profits running off the flash crash lows and the extension lows from March. Had a nice little robust recovery on this Aussie Swiss. I want to make sure that I'm protecting some of these profits, and here is why. We have a nice price gap right here. So we have a nice price gap right there that we're coming back into right now. We have previous lows, future resistance, right? Previous lows are support. We're looking at future resistance right around the 65.50 area. Now, to make sure that I'm not holding these positions, let's say that we have this nice little recovery, and then we have a pullback. Well, if this pullback forms a higher low, then of course I can take that trade to the upside with new entries. But rather than sitting here holding, I have some trades that have been upside down, so I'm going to look at protecting those because I had some trades that are in for profit, that are in for not profit, so I want to make sure that these losses are reduced and these wins are collected. All right, so I've essentially just given myself a haircut where I take these losses, I take these wins, and I close them out. Now I have to figure out what to do next. So I do think that this area, now it may drift a little bit higher. It may not really have much of a pullback until this massive support level around 6,500 to 6,550, which is okay. If we go up here and drift higher, that's good. That continues to reduce this drawdown. And then we might have a fresh position to take for some selling, right? But I'm thinking that we're going to have this gap getting filled. We have a little bit of a retreat because of the stock market potentially dipping off that 50% hit. So stock market hits 50% and starts to slide lower. Pairs like the yen, pairs like the Swiss start to get a little bit firmer over this week and maybe for the next couple of weeks. But we'll see. I mean, if it has no bearish candle, then obviously I'm not going to jump in and sell it. If we have no bearish movement, then I'll just wait and try to ride this out. But I'm going to protect myself with profits here, take those profits and wash away some bad trades, and then just be patient. So this is all about trade sizes. A good way to kind of manage positions if you're using higher time frames and you build these kind of small built-up positions at major highs and lows. But we'll see what the Aussie ends up doing for the next week or so. I also have noticed some extremes on some smaller time frames. So I want to make sure that before we get a little correction and before we get a dip, I don't want to give that back. So profits, I want to make sure that I protect them and I can wash some of the bad stuff away. So I do think we're going to have at least some type of pause up here, possibly a dip coming, a retracement coming. And then if we have a higher low or a retest of the low, then we have more of a long-term outlook. If we come back into this area, we have a higher low, push up one more time, let's take advantage of that trade. And if we just keep drifting, that's fine. But either way, if we drift, mitigate a lot of that drawdown, take some profit, of course, and then expect this to correct in some capacity. Medium term, long term, if we get back to these lows, super interested in holding, a pretty nice long-term position on Aussie Swiss. The difference would be, building a long-term position from these lows as opposed to where I had previously built. This was a long-term position at 20-year lows. But this giant sell-off in March has kind of crushed that move overall and really, changed the overall structure of this kind of long-term currency pair. So I'm going to use this low for a long-term approach and see if this becomes a larger channel, which if I zoom out, you will notice that if you connect these highs, we do have some resistance right here. Lots of resistance right there. Previous support becomes future resistance, and now we have this low from March. So if we make a recovery up to here, then perhaps that's channel resistance and we start to see it slide back down. But we can buy low, we can take profit. We can sell high, we can take profit. And we can keep playing with the structure unless we see this structure break. If the bulls all of a sudden close way up here, then that's a different story. Let's see if we can get this low to form, take out these highs, pull back in here, build up the demand for a head and shoulders that's bullish or a crown pattern that's bullish. And that changes the landscape of the currency pair in the long term. So anyway, Aussie Swiss, it's been a bit of a story. Aussie New Zealand, one of my favorites and doing extremely well. I'm going to continue to ride this pair as high as possible. We're currently trading around 104.70. You can see I have a lot of entries in. There's some nice money to be had, and I'm trying to take this one minimum to 107.50. If I can hang on to it towards the highs at 108.50, I will be thrilled. So right now, we're either going to come up here and score a point at this high and then go sideways, and I would look for that to continue to go up. All right. We may see this also, at these highs, come up here, pull back into the backside of this trend line, find some higher lows, and then go up. But my outlook on Aussie New Zealand, which has been the same for the last, 3 months, 6 months, 8 months, trying to buy as low as possible and take it up to a nice profit level. So 107.50, 108.50, trying to make as much money as I can on this pair. And if that is, buying high here, I will stack those orders up and buy. If that is getting a pullback first and stacking up some orders this way, I will do that. I'm going to make as much money as I can to that move into 107.50. So that's also why I'm taking some small losses and I'm washing some profits so I can get back some of that trade size and margin to add to a trade that I think is going to do really well, and that's the Aussie New Zealand. Aussie dollar looks very similar. On a daily chart, you can see we have some pocket levels and inefficiencies to recover back towards, I'd say right around 6,400 to 6,420, which gives us another maybe 40 to 100 pips to the upside on this Aussie dollar. Again, if the stock market starts to slip, then expect this to go down a little bit. Now, if we form a higher low and push up one more time, that's okay. If we start to drift ever so slightly to the upside to get back to this level, any previous order that I have in Aussie dollar, I'll likely be closing for a break even or better, or I've taken some profit already on that buy. I got filled way down here at like 59, 57, and 56. Took some profit on that first run up in early April, and I'm just kind of letting the rest drift. So I still think we get to 64 plus. I'll take those profits. If I have some, this is one position that is slightly upside down, I'll wash that with some of those profits and walk away net positive, and then apply that margin with neutral positions. CAD Swiss I like. Euro pairs. Euro. A lot of the Euro Aussie's been nice to the downside. Aussie Swiss to the upside. Aussie's recovered nicely. New Zealand's recovered nicely. Look at that. Just runs through the flash crash level, makes a high, flushes out all the retail traders, and then we come down. Oh, no big deal, like 2,000 pips. It's been nice to trade. We've had a really nice run on the Aussie pairs. Okay, this has been making, you can see lower highs. So we have this crazy big move. Lower highs, lower highs, lower highs. Volatility has dramatically reduced. We are not seeing 3, 4, 500 pip daily trading ranges in the Forex market. We are seeing primarily maybe 100 pips, maybe 150 pips. Way more choppiness that's going on. But within that choppiness, there's still an overall trend, an overall context, which is still bearish. So this has been a nice trade to stay bearish on. We had some indecision over here. And look at how nice that was. Indecision, that broke, we break, we retest, and then off we go. So some nice trend trading to the downside from the highs around 77 all the way down to 71. Not to mention, of course, that we had this volatility, all these highs and lows that we were scalping in between. So we made some really good trades here on Euro Aussie, Pound Aussie, and then recently it's just been Aussie Swiss long, Euro Aussie short, and just raking in some of those trend profits. Euro CAD we talked about. Euro Swiss, let's take a look at this one. Euro Swiss, it just needs a nudge to the upside. It's currently trading at 105.50. Just a ton of indecision between 105.50 and 106.00. I think technically speaking, this is a really great currency pair. It just needs a little help to the upside, and maybe it's this trendline break. If we can get something convincingly bullish, above this 106.00, 106.20 zone, I think we can easily go towards previous support over here towards 108, possibly make a recovery towards our outer channel and resistance around 110. We just need to see a nudge. The hard part about Euro Swiss, as the Euro and the Swiss, they've been in lockstep. We've seen the same strength and weakness on both Euro and Swiss, and that's why this currency pair has just been brutal, because we're not going anywhere. Lows at 105.25, highs at 106. I mean, we're talking about 2 or 3 weeks of trading here. If I go to a weekly encapsulation, look at this. 1, 2, 3, 4, 5. We have 5 weeks of trading right now. That's no more than maybe 50 to 100 pips of total movement. So something's got to give, and hopefully it is the Swiss giving up some strength and giving up some of its stability, or the Euro gets a nice little jump start to break this level. But technically, this all has to happen. We just have to break that structure, and it looks pretty good to the upside. All right, Euro dollar, dollar index. Let's go to dollar index really quickly. So dollar index, the big shakeout from March. We're starting to see, the dollar. Here's actually a really good look. Let me get rid of that encapsulation tool. This is the dollar index. Look, this pattern is called a cup and handle. And what this is, it's effectively a head and shoulders pattern where there's no left shoulder, right? So we see that this is this crazy big move to the upside, very violent move to the upside, but it was so quick There was no structure right over here. So instead, we have this low. And because we have this high to low swing, lower high, if we break and close below this level, then this dollar will continue to weaken. If that is the case, expect Aussie dollar, New Zealand dollar, Euro dollar, pound dollar to make some really nice recoveries. Dollar CAD should recover. Actually, dollar CAD would be this way. Dollar CAD would be recovering this way. Oil also needs to show some strength. Oil is priced in dollars, so that might help as well. Gold is priced in dollars. That might help. Bitcoin, currency. I mean, the dollar can move a lot of things. So if I'm looking at the DXY, the US dollar index, if we break that level, look for a daily close. That daily close should open up a pretty fast movement into, maybe 12,300, maybe even 12,200, or come back in and just reset at the initial breakout point, which was way down here around 12,200. So could we come all the way back down to the lows? Yeah, sure. I'll just look at measuring this. Just take the measurement from this high to low, right there, and we have two spots that I'm watching. One is based on symmetry, so I take this move, and I measure it right there. So that is symmetry, which gets us to around 12,250. Or we have the actual cup and handle breakout point, which is there, and that gets us right back down to the same lows, which is around 12,100. So there's definitely some downside potential on the dollar index. So what I'd like to see is that confirmation. Can we get a clean break below this level? If so, break and go, or break, retest and go. I would say if it's going to delay a little bit longer, maybe it stalls right here. High to low, retracement, and then we look at either selling this nice and high to start that range trade, or we get the breakout and just follow the confirmation to the downside. So the themes for trading this week, I like dollar index looking weaker and staying weaker, so I expect Aussie dollar, New Zealand dollar, Euro dollar, pound dollar continue to recover to the upside. Keep an eye out for those yen pairs and Swiss franc pairs based on the stock market. If the stock market is going to drop, keep a close eye out on this indecision. If this indecision starts to form more of a confirmation bearish candle, then this will likely be dropping back into some of this intermediate structure, and we might have a slow burn to the downside back into those March lows. So this comes full circle on the major indices. We have intermediate structure. If we come back down here, look for this to make a continuation pattern to the downside to retest those lows. All right. If the market can shrug this off and we have more indecision this week, or even a slight drift to the upside, we still have these retracement levels that are very important, like the 61%. Okay, this high-low swing, 61.8% retracement. That's a good spot for the bears to say, okay, it's time, and then off they go. All right, but I do think that we're going to face some more, threats. I think we're going to, face some more of the reality of jobless claims and everything kind of looking sour for the next 3 to 6 months as far as the contraction taking hold of the overall global economy. So that's not to be doom and gloom. That's to make sure that you are positioned accordingly and not caught off guard. So here's my question to my traders last week in my trading room. If you had March to trade all over again, what would you do differently? All right, I think March caught the world by storm. It caught hedge funds by storm. It caught the stock. I mean, everybody was like, what is happening? So if it's going to present May again, or even mid-April, if we present this opportunity again this way and the volatility index gets above 50 and starts to show this aggressive bullishness once again, what would you do differently? So I know what I do differently. I would be neutral going into this movement, meaning that I want to make sure that I can position myself in getting out of stocks. I can position myself in protecting my stock portfolio, and I can position myself into trading aggressively in the currency world, where we see the yen getting stronger, the Swiss getting stronger, and possibly the dollar. Now, I think right now, the dollar looks like it is subject to some more weakness, so this stock market may continue to drift a little bit higher and allow that dollar move to play out. Now, if the stock market starts to drop, then as the dollar finds some lows, maybe it's at 12,200, maybe it's at 12,100 on that dollar index, then we go dollar long and stock market short. So I think that could be one really important lesson that the market may give us a chance to trade, is we saw what March can do. We saw what the fear and uncertainty can do, but we can also see what the reality can be. And if the reality is more of this, the reality is more of a, look, we're not even close to getting the full economy back yet. Then if that starts to happen, maybe it's that degree, or it's not to the same degree that we saw in March, but we could be doing something very similar as far as the risk off trading. Look at something like the volatility index. if the volatility index, which is at 45, if this gets back up above 50 and closes on the daily or weekly above 50, I would suspect that if we're putting in a bit of a higher low, sustaining a run above 50, then even if we don't come all the way back to 85, can we get back into this territory? If the VIX is above 50, I want to be a scalper. I want to be, I'm not going to say day-to-day trading, but there will be really good opportunities in the Forex market to be a day trader. We will see some really good, London session movements, U.S. session movements, probably Asia session as well. But the yens will be on the move. If that's the case, we'll have some fear, right? This is the fear gauge. So just a good barometer, right? Watch the dollar index, watch the volatility index, keep an eye on the Dow Jones, the NASDAQ, the SPY. That'll give us a good sense of, is it risk on, is it risk off? I think that's what we need to be doing more than anything, is just assessing the conditions, assess the environment, and trade accordingly. I think that if we can survive right now, we come out of this, unscathed, we come out with some amazing opportunities in the long term. In the Forex market, if we come out with, short-term profits that lead the way, and I mean, look, if my whole year was made up by one big position trade or a couple of position trades here and there that take the entire year to play out, fine. But most of my profits are probably going to be realized with, day-to-day trades or something that maybe lasts only 2 to 5 days. And I'm going to do that as much as I can. If the conditions are right for it, then I'll make sure that I transition my strategies to fit it. So I can only, I've traded the same way for years and years and years. But March has caused me to change. March has caused me to go back to more of the stay objective and stay directionally unbiased and just trade with what the market's given us. And if we have volatility, I don't care what direction we go. I just want to be trading and grabbing some pips and grabbing some points and some profits. So that'll do it for this week, traders. Again, if you're following me out there this week, I'll be posting this weekly outlook as I do always on social media, Instagram, Twitter, Facebook. I'll have an Ask an Analyst session. I believe we're scheduled for Thursday at 2 p.m. Eastern Time. Everyone is welcome to join myself and my colleagues Gary Fickhart and Tyson Clayton on that. We've had an awesome 3-4 weeks running, great content. And again, I'll post this video on YouTube, so like my channel, subscribe, get the notifications. If you want to get into that Facebook session, send me a message on Instagram or Twitter or YouTube. Just send me a message on those, and I will send you the link to the Facebook session this week. And look forward to seeing you all there, and say hi and ask some questions. All right, so have a good week, trade accordingly, and let's see what happens, traders. All right, talk to you soon. Bye-bye.